Hello everyone, welcome to another episode of Financial Tidbits here with me, Royston at NAOF. Today, I will be evaluating a Singapore-listed REIT which goes by the name of Lendlease Global Commercial REIT, which is a REIT that was listed back in late 2019. This REIT is backed by one of Australia's largest construction companies, Lendlease Group, which owns assets such as Parkway Parade, GEM, and Paya Lebar Quarter here in Singapore. Lendlease REIT currently has exposure to just 3 assets in its portfolio, the largest of which is its 98.6% stake in 313 Somerset, a shopping mall at the heart of Orchard Road that most Singaporeans will be familiar with. The second largest asset in its portfolio is its 100% stake in Sky Complex, a Grade A office in Milan that is fully leased to Sky Italia, an entity that is owned by Comcast Corporation. The third and smallest asset in its portfolio is its 5% stake in GEM, which is a suburban mall located in Jurong that the company has the intention to raise its stake in this entity to approximately 32%, something which I will talk more about later. There are a few areas that I like about Lendlease REIT. First, it has a high weighted average lease expiry, or WALE for short, that stretches up to 4.6 years on a gross rental income basis. The longer the WALE, the more visibility there is for its future income. According to Maybank, Lendlease REIT has the longest WALE among retail-cum-office REITs and the top 6 longest WALE among listed REITs here in Singapore. It also has a solid occupancy rate of close to 100% as of March 2021, and its exposure to Sky Complex in Milan provides stable income visibility, given that the lease will expire only in 2032. While the retail space in Singapore is under pressure from COVID-19, Sky Complex is an asset that helps to smooth out the earnings volatility of the REIT. Next, a major redevelopment project is currently taking place at 313 Somerset, where an event space has been substantially leased to Live Nation, and that alone could boost Lendlease future DPU by approximately 10% when completed in 2022. Lastly, having a strong sponsor with a good pipeline of assets will ensure continual growth potential for Lendlease REIT. Of course, there remain concerns over Lendlease REIT's substantial exposure to 313 Somerset, which remains the dominant asset that accounts for the bulk of its property rental income. Being a downtown mall at the heart of Orchard, the business will undoubtedly be affected if more COVID-19 restrictions are set in place. That is why Lendlease's latest move to acquire a greater stake in GEM, a suburban mall in Jurong, is a sound strategy that will help to partially mitigate the negative impact COVID-19 might have on shopping malls located in the central districts. Let's talk a little more about that acquisition, which will seek to increase its stake in GEM up to 31.8%. The company first announced that it will be issuing 200 million of perpetual securities in late May, with a distribution rate of 4.2% per annum that will be reset every 5 years. Note that perpetual securities have no expiration and, like its names, can be forever. In some cases, even if the distribution stops, it might not be considered a default by the issuer. Investors should take note of that. For this Lendlease perpetual, there is also no mention of any step up in rates upon the 5 years reset mark. What is good about Lendlease perpetual for the company is that such issuance, instead of being accounted as borrowings or debt in its liability, is considered as equity. Hence, while the company got access to more funding, it reduces its overall gearing ratio from 35.4% to 31.3%. What is not so good is that the cost of issuing this perpetual at 4.2% is so much higher versus the cost of debt, which is currently at just 0.88%. It's so much cheaper to be borrowing from the banks, but doing so will result in higher leverage, and Lendlease definitely cannot afford to do that or risk inching closer to the 50% maximum cap set by the Monetary Authority of Singapore. With the acquisition of the additional stake in GEM, partly funded by this perpetual issuance, Lendlease's gearing ratio will inch back closer to the 35% level from 31%, which still allows the REIT plenty of bandwidth to gear up and make future acquisitions before being at risk of hitting the 50% ceiling cap. So coming back to the GEM acquisition, the ownership structure in GEM post-acquisition will be one where Lendlease will have an effective indirect stake of up to 31.8%, up from the current 3.75%. For that stake, we will meet a total cost of 337 million. After accounting for management and miscellaneous fees of about 10 million, the total acquisition outlay will be about 347 million. According to management, this transaction will result in DPU rising by 3.6%, where the higher income generated from the increased stake in GEM is partially negated by the 4.2% higher interest cost associated with the perpetual. After acquiring the additional stake in GEM, Lendlease will be a more diversified animal, with a lesser reliance on 313 Somerset as well as higher exposure to the suburban retail market. All initiatives that are trending in the right direction, in my opinion. Now, GEM is not just any suburban retail mall, but one which is the dominant retail mall in the west of Singapore and has a track record of being the best performing retail and office mixed-use assets in Jurong. An exciting development will be IKEA establishing its first small concept store in Southeast Asia at GEM. With an overall occupancy of 99.7%, the outlook for GEM is pretty stable, I would say. Lendlease likely also took into consideration future growth potential in Jurong when increasing its stake in GEM. With the development of the Jurong Region MRT line and the new Jurong East Integrated Transport Hub in 2029, enhancing connectivity in the region. The 600 hectares Jurong Innovation District, with its first phase near completion in 2022, will also function as an advanced manufacturing hub and create over 95,000 new jobs. In March 2021, Lendlease was added to the IHS REIT Leader Index and IHS REIT Index. The former is highly liquid and often used as an S-REIT benchmark. As a member of the indexes, it is expected to enhance the liquidity and visibility of Lendlease to investors and funds. At the end of 2020, Lendlease was also included under CPF's investment scheme through one's ordinary account. While it is not blue skies ahead for Lendlease, with many retail malls still recovering from the impact of COVID-19, Lendlease is probably one of the more resilient REITs listed in Singapore, and its exposure to quality assets will help the company ride through the downturn in one piece, in my view. Will I be looking to buy into this REIT? This is one REIT that is gaining favor from the market and is currently trending higher and also has a positive buy signal using the Trader's GPS trading platform, which could present a short-term trading opportunity. Based on the street forecasted DPU of about 4.5 cents, the yield at its current price is slightly above 5%, which just makes my mark for a long-term purchase consideration. I don't mind nibbling at a counter based on the assumption that the worst of the COVID-19 pandemic is behind us, and with the majority of the population expected to be vaccinated by end of 2021, the counter will be a reopening beneficiary. With a longer-term horizon, I see Lendlease continuing to increase its stake in GEM, where the mall is set to benefit from the greater growth plans of the Jurong vicinity. With that, we have come to the end of today's financial tidbit, featuring one of the up-and-coming REITs in Singapore, which I do find some value in, both from a trading angle as well as from a longer-term perspective. I hope that you have enjoyed this video. If so, do hit the like button and subscribe to the NAOF YouTube channel. With that, this is Royston signing out.